Hello, hello, it is the Trading Captain. Now, today I want to talk about small caps, particularly with a cold market context. As you can see, I'm dressed the part, I got my scarf, got my hat on, I'm all set to go. But really, I just want to talk about this cold market we've been in, how I've addressed it, and how I really try to adapt to the situation. So let me go ahead and pull up some data here. And we have two sets of data. I have a hot market set of data. This was from October 1st, and this was really a hot stretch we were experiencing in the market. And I actually have a cold data set that was taken immediately after, which is whenever I started the small cap challenge. And unfortunately, this was really the start of the cold market. As you can see here, the same amount of time has passed. These are both 14-day periods, and yet the returns are vastly different. So I have a bunch of different data that I've broken down into charts and bar graphs. So I really want to show these points to really drive home why these differences are here. So first of all, of course, we have the big discrepancy in returns. You can see just the general returns. I'm making way more in the hot markets than I am in the cold markets. But these other three data points really show why. So first off, in regards to average return, you can see I typically have about 3 times higher returns in a hot market than a cold market. And this is generally because when we have a cold market, stocks tend to not range as much. They tend not to break out. They tend to be a lot more consolidated. They don't make crazy moves. And this is natural that I'm having to cut trades earlier. I can't give as much breathing room. I'm having to be a lot more selective. And these other things also complement this. But as a result of all these things, just generally, I don't have as much opportunity to make money. The opportunity is smaller, if it's even there at all. So in regards to accuracy, and this is very important to notice, especially with the number of trades. Now you can see my accuracy is actually pretty close between cold and hot market. And this isn't because the odds of a stock resolving are just as good as a hot market. In fact, the opposite I would say is true. Typically, as you can see here, my number of trades is much, much lower, right? It's less than half. And that is because I'm being a lot more selective with my setups, right? I'm not really just jumping in. Whenever I was in this hot market stretch, there were periods where I would be taking 17 trades on a very, very aggressive day. But lately, you've seen me taking three trades, 2 trades, 3 trades, way, way less. And the reason is because I'm being more selective. I recognize that a particular setup will not resolve the same in a cold market as a hot market, and also that the length of the move, right? This range of the move is also typically much smaller, so I'm typically looking for much lower price targets, right? In a cold market, I might look for 5 or 10 cents per share, whereas in a hot market, I might look for 20 or 30 cents per share. And that range really just depends on the context of the market. So when you consider that I'm taking way less trades, I'm making way less money because I'm taking money off the table sooner, the fact that these accuracies are very close should actually be a red flag that the setups in the cold market are not as safe. All right, if I'm having to cut earlier and be more selective with my trades, yet my accuracy is actually slightly lower than a hot market, that really just shows that the conservative nature may actually be understated, and I may actually be still being too aggressive. But, I mean, overall, I'm still making decent profit. Now, this is before commissions, of course. This is gross returns. So the commissions do play a role here. But just in general, I still think that exposing myself to the market, especially in a cold market, is really important because I could just say I'm not going to trade for a few weeks and wait for the market to heat back up. But the problem is that the context day to day is really important to me. I feel like I can really assess if I should step on the gas or not if I understand how the market has played out the last several days. So that's why I trade every day. That's why, or at least attempt to, right? I'm not going to force trades, but that's why I come to the market every day and I try to assess it because I think it's really important to keep that context of the last few days, of the last few weeks in mind. Whereas I could come back in 3 weeks and, oh, okay, it's hot now, but I don't understand if it's just a one-off or if it's been a gradual climb up. And only those things can be answered from really actually being there or just assessing each day. So that's why I'm here. That's why I do it. So unfortunately, we are still in the depths of a cold market. The end of the last week was still very cold. And you can see I was still taking very low trades each day. So the plan, unfortunately, is to keep being conservative in this kind of market context. really making sure that I'm only taking the highest quality setups. I'm cutting trades early, reducing size, reducing any real exposure to the moves. This is really important for minimizing damage in cold markets. And then when the market heats back up, I can start looking for these more aggressive setups where I'm looking for the bigger moves. I'm looking to take more trades, and I can be somewhat reliant that the hot market will bail me out, even if I take inappropriate entries, exits, and all that stuff. But yeah, I just wanted to go over this, kind of give my thoughts on a hot versus cold market context. If you found anything here useful, please do leave a like. I will be back tomorrow at 7 a.m. EST to start live streaming. I live stream every day. So if you're interested in that, you can watch me live. But until then, I will be back Monday. Take care, everyone.